Everybody's asking one question. Is Micron going to continue falling on Monday? But I think people are looking in the wrong place because while the United States has been closed for the 4th of July, the rest of the world hasn't. And what happened overnight in Asia may have completely changed the outlook for Micron and the entire AI memory sector. Today, we're going to break down what happened in South Korea, why it matters for Monday's open, and why I believe Micron is no longer the cyclical memory company that investors think it is. While the US investors were enjoying the holiday, South Korea's stock market continued trading. South Korea isn't just another market. It's home to Samsung Electronics and SK hynix, two of the largest memory manufacturers in the world. Along with Micron, these three companies control an overwhelmingly majority of advanced DRAM and high bandwidth memory production. So if you want to know how investors feel about memory, you don't need to start with Micron. You start with South Korea. So going to South Korea here. Just one trading session ago, investors absolutely panicked. Samsung lost roughly 9%, SK hynix plunged nearly 15%, and the Korean semiconductor sector was hit hard. Investors immediately assumed Micron would continue lower, but something changed in the next trading session. So what people are not realizing here, SK hynix surged roughly 11%. That is a massive reversal. So the question becomes, was Thursday's sell-off actually the beginning of something bigger, or was it simply just an emotional overreaction? Historically, US investors often take their cues from the South Asian semiconductor markets. Institutions watch South Korea overnight because Samsung and SK hynix are essential leading indicators for global memory demand. So when those companies recover, it often improves sentiment towards Micron before Wall Street even opens. So does that guarantee Micron gaps higher on Monday? Absolutely not. Markets don't work that way, but it does remove one of the biggest bearish argument investors are heading into the holiday weekend. Instead of seeing continued weakness overseas, they're now seeing buyers step back into the sector. That's something I'll be watching very closely on Monday morning. But here's where I think the conversation becomes really interesting, because most investors still value Micron like it's the same company it was 10 years ago, which was a cyclical memory manufacturer. So demand goes up, supply catches up, prices collapse, and then rinse and repeat. That's been the memory business for decades, but I think something fundamentally is changing because of artificial intelligence. Micron isn't just selling memory anymore. NVIDIA gets all the attention, but NVIDIA has a problem. Every GPU it builds needs enormous amounts of high bandwidth memory, and without memory, that GPU becomes incredibly inefficient. In many AI workloads, memory bandwidth has become just as important as compute power itself. So is Micron still the cyclical company it was? Well, we're seeing here Micron that GM signed semiconductor supply agreements for vehicles, and they have these agreements with multiple companies now. So essentially, what this is Micron is no longer just selling memory on the spot market. So it's locking customers into multi-year strategic customer agreements, or SCAs, that are designed to reduce the industry's traditional boom and bust cycle. So this is, I believe, a pivot into the fundamentals of Micron and whether or not it's still a cyclical company or not. 16 strategic customer agreements have already been signed. Most are 5-year contracts running from 2026 through 2030. Automotive agreements are generally 3 years, and they are structured as take or pay agreements. That means customers are committed to buying specific volumes, and they owe payment even if they ultimately don't take delivery of all those chips. Micron expects about half or more of its future revenue to eventually be covered by these agreements. 14 of the 16 agreements represent approximately $100 billion of minimum contracted revenue and $22 billion in customer deposits over the financial commitments. So you might be asking, why does this matter? At this point, almost nobody is explaining. Historically, memory worked like this. Prices would go up, everybody builds more capacity, supply floods the market, and then prices collapse. That made Micron a classic cyclical commodity company. But today, AI has changed the economics. Microsoft, Meta, Amazon, Google, NVIDIA, and other major customers can't afford to run out of advanced memory. Instead of wanting to buy memory when they need it, they're reserving production years in advance and putting real money down to secure supply. So what I believe here, Micron may be becoming less cyclical than it has been historically because of a growing portion of its business is protected by long-term take-or-pay contracts with committed customers. And that distinction matters. If AI demand weakens materially, those contracts could still face pressure or renegotiation over time. But if they hold, they represent one of the biggest structural shifts of the memory industry has seen in decades. The biggest debate isn't whether Micron is cheap. Everybody agrees the forward PE looks low here at 22.09. The real debate is whether those earnings are sustainable. If AI has permanently changed the memory business, then Micron may deserve a much higher valuation multiple than the market is giving it today. But if it's just another memory cycle, today's low PE could be a value trap. So tell me, what do you guys think? Do you guys still think that Micron here is stuck in a cyclical cycle, even after locking in multi-year to take or pay agreements? But let's go ahead and look at the account right here to see what I'm personally doing with Micron. So the account right now is sitting at 382,250, up about 12.44% year to date in comparison to the SPY, which is up about 8.5%. So we're doing okay. I have my position here on Micron. I trade options and I went ahead and sold the put here on Micron. So I sold the MU 850 put. I sold one. My premium was about $5,200. This is expiring July 31st. MU, if it pulls back to the 850 range, that would be the lower Bollinger Band on the daily chart for MU, which would come to about right here on this level of support, right here in this range. If we do get a pullback down to here, I do expect a rebound to at least test this previous high that acts as resistance now, before potentially going back to all-time highs. So if MU does go to this level, I'm okay owning the stock at this price. At the end of the day, I don't think the biggest question, so that is my position, whether Micron goes up or down on Monday. I think the bigger question is whether Wall Street is still valuing Micron as yesterday's memory company instead of tomorrow's AI infrastructure company. If AI demand continues at the pace that these long-term contracts keep expanding, we may witness the beginning of a structural shift in the memory industry, not just another cycle. As always, we'll be watching it closely. I appreciate you guys coming in and sticking around for this video. And I hope you guys all have a wonderful day in the name of Jesus.